that there was sure and that we're not doing any of the or showing any of the work that preceded the analysis. But we determined that there was very strong resistance area, 3850 to 39, on the USO, which is United States Oil, the oil ETF. And we set up a campaign chart of 130-minute bars. And we got a high at about 3850, and we got a breakout bar, which is also called a fractal, and it's a low that was preceded by two higher lows and followed by two higher lows, making this bar the breakout bar. And we used the breakout bands and took the trade at this level, and then swapped to a swing chart, which we use to manage the trade. And we're showing it this now because of the 5 waves that we want to show you on the bottom. The 5 complete waves are showing on a 30-minute bar. And again, we want to use about 120 bars in the swing chart, and the relationship to the time is only the time necessary to get 120 bars. But you can see that from the high at on Thursday, July 18th at about 38.61, we would have gotten in the trade around this price area, which is about 38.02. And it's because it's a bear move, it's a down wave. We have wave 1, wave 2 just peaked back above the 0 line. Wave 3 is always the lowest point in the oscillator. Wave 4 crosses back above 0. And we have wave 5, which is another low point in the oscillator, but there'll be a divergence between the oscillator and price, and you can see that here. Price is significantly lower than at the peak of the oscillator in wave 3. There was a change in momentum as the bars changed from the orange to the blue, and also a change in acceleration, which is a derivative of the momentum. So we could see from our 30-minute swing chart that momentum had shifted dramatically after the 5 waves down, which indicated that for trade management we wanted to exit this trade at a reasonable stop loss point here, take the profits that we earned from this point, and kind of hang out for the next trade setup. Because the campaign chart still indicates that we're in a bear campaign, we're not going to go long on the swing chart, but we're going to go back, do our homework, do our analysis, and determine the next likely area that price will meet resistance in this pullback, and we're going to look for another trade setup like we did on the initial campaign swing. We're showing that there's a strong possibility that the USO may continue down till it meets strong resistance and say the 29, 30, 31 price area, but we're getting ahead of ourselves there. But we just wanted to show you how we can manage a trade using the campaign chart and the swing chart and the oscillators, and this is without even going into any of the pre-analysis we did to determine where the support and resistance areas were, or how to go about picking a highly likely reversal point. Hope you got something out of it.